after the market is closed. And as you might notice, I got my hands on a microphone, so hopefully the sound quality is perfect and there's absolutely no issues. Let's see what happened in the market today. Now, this morning I wasn't able to record a video because I wasn't in a place where I was free to talk out loud openly. So unfortunately, we didn't get the video, but I did send out notes on what to look out for. And what we were looking for today is in the S&P 500, we were slightly positively biased in the morning, but that changed throughout the session. Obviously, we end up with a red bar today, and we touched this blue line, and it held so far, and we're going into the weekend, so we'll have to see what the weekend brings for us. But so far, this move is completely expected. Our expectation still is, unless something weird and crazy happens over the weekend, that this line will hold and that we should be bouncing from here. But once again, if we don't, and we move downwards, it's not the end of the world, right? If we go from this top right here down to where we are right now, that is a 10.5% move. That is a normal consolidation or correction, and a slight move a little bit further, no big deal. That's still within this horizontal region of support, but we're not going to expect it to fall completely through and enter a bear territory, at least not yet, unless something weird and wild happens over the weekend. So far, this is looking okay. Let's take a look at how that developed during the day. And as you can see, during the day, we were actually up. We were above this close, and we remained above this close for quite some time. After a couple of hours, the market started to show its hand and started to go lower. And going lower into the weekend, taking risk off the table because we are in a uncertain use time. So if nothing weird happens over the weekend, the pattern that we've seen, what we can expect is that Monday morning, there'll be a relief that nothing happened and no major news happened, and we'll get a rally on Monday. How long that rally lasts, how long it lasts into the week, we'll have to see. But at least the weekend effect will be, if nothing gets announced, nothing goes on over the weekend, then we can expect a short rally on Monday. Otherwise, we have to see what the news is and how everyone reacts to it. So for now, this level is holding. Our bias is towards the upside, and we're going to look forward to potentially getting to that EMA 20 or MA 50. Of course, if that happens, that's still a lower low, and we will still be in this downward sloping range that we've been trending in. So what we really need to see is to break above this local high right here. We may not get that all at one shot. It may take first attempt and then pull back and then a move upwards, and then it would look sort of like a reverse head and shoulders pattern. But for now, we're just going to anticipate that if there is nothing announced over the weekend, then we can hope for a small bounce on Monday. Otherwise, we have to see exactly what the news is. TLT slightly down, green bar, but slightly down, 0.42%. No new lower low though, so this is still consolidating and moving sideways. We probably will until we get the Fed announcement, which at this point is now 4 days away. So we're pretty much at consensus that nothing's going to happen this time. And then in December, there's only a 19% chance that we are going to raise rates. So with bonds moving downwards and coming down so low, that's done some of the Fed's job for them. They don't need to continue to raise rates, especially if bonds start to fall. But for now, we're going to wait and take our cues off of the Fed. And then once the Fed says what it's going to do, then the bond market will be free to resume whichever direction it's going to go. At this point in time, it's looking like down, yields up. So real interest rates, the effective interest rates are still on their way up. Let's take a look at what happened with VIX. VIX is slightly up, just tiny bit up from here, but on a bar-to-bar movement. It just looks pretty much flat. So still elevated VIX. We're going to expect that to come down over the next 1 to 2 weeks. Now let's take a look at our sectors. Sectors for today. QQQ, XLY was strong, tech was strong, so communications was strong. So if you saw my note in the morning, I said if the market was up, we would want to concentrate on tech and communications. If the market was down, we would focus on utilities and staples. We started out up, then we went down. So in the morning, the XLK, XLY did very well. And then we came back down, but we still ended up higher on XLK. You see that in XLC. Same thing, went up then down instead of ending higher. The XLC did end up lower though. And then if we got into XLU, XLU did not catch a bid. It was not strong. So even with the weakness, well, money was leaving the market entirely rather than going into a defensive sector. Let's see if that was true for XLP as well. Yes. So when we got to the weekend, risk off, money managers are putting them into safer sectors, or not sectors, sorry, safer instruments other than equities. So money completely leaving the market. That's why you're seeing this downward movement across all the sectors. There's only a few that were positive, XLY being one of them, and semiconductors and tech being the other two. So our feeling in the morning that there would be optimism in the tech sector was correct, and it remained so throughout the day, even though the overall indices ended up selling off. Let's take a look. I'm not sure how large of a earnings week we have coming up, but generally we get them all kind of clumped together. So this week being the heaviest week, next week should be fairly heavy as well. But let's just verify that. Okay, and yes, we have 44 pages, so around 880 being announced. And if we look at how many of them are in the S&P 500, we've got around 160. So another roughly quarter or more than a quarter of the stocks in the S&P 500 announcing their earnings next week. So next week, we're going to expect it to be very similar to this week. It's going to be very heavily earnings focused. As long as nothing wild happens in the treasuries, we're going to remain focused on the earnings. And as long as we don't get a weird FOMC surprise and they raise rates, then we will be mostly earnings focused. The earnings are going to be the major driver. Or if we get a weird, inflation. If we get a weird inflation surprise. So let's see what's on the economic calendar for next week, if I can. It doesn't look like I'm going to be able to pull this up. I'm going to have to use a different calendar system. For now, we're going to expect that earnings are going to be the major player in the market next week, just like it was this week. So there's a lot of confusion in the markets. We've seen every day this week, different sectors have been leading. It's been tech, it's been utilities, it's been staples, it's been real estate. All money is popping around. So there's a state of confusion within the markets. We're still finding exactly what direction the market is going to go in, and that's partially caused by uncertainty with what's going around the world, the role that US is going to play with conflicts around the world, and whether or not politically and economically the United States can withstand all of that entering into the conflict. So right now we want to be very, very nimble. There's nothing clearly leading or clearly moving downwards. It just keeps jumbling and moving back and forth. So we want to keep our trades nice and short. Other than that, we're going to just look for what's happening over the weekend and then reevaluate when it comes to the pre-market on Monday morning. All right, guys, have a wonderful weekend, and I will see you on Monday.